So we're going to be diving right back into the agenda today with an exciting panel. We're going to be discussing stablecoin opportunities, the use cases, as well as barriers for fintechs and PSPs. And today we have a handcrafted panel of seasoned experts that approach the stablecoin landscape from slightly different lenses, which I think is going to make for a great conversation. So we have Julia from FIS. FIS really approaches stablecoins from a more central bank and commercial bank lens. We have Caitlin from WorldPay, who is really set with merchants bringing real world use cases to life. And we have Ashish from PayPal Ventures, who's been investing in fintech, crypto, and across the payments landscape for many years. So he also has a unique perspective. But that's enough of my monologue. Maybe I'll just hand over to the panelists to do a quick intro of themselves. Julia.
Sure. I'm Julia. As you mentioned, I work for FIS. I'm heading FIS's CBDC and digital regulated money activities. So I'm responsible for product and strategy, working on developing the central infrastructure for central banks to be the issuers of central bank digital currency, whether that's your retail CBDC or whether that's your wholesale CBDC, and of course supporting the cross-border payments CBDC as well. And then of course, in addition to our CBDC efforts, we are also working on developing the infrastructure for the stablecoin issuers. Of course, we have regulation in Europe, a MiCA regulation that takes off in June of this year, and we are looking to provide the infrastructure for the issuers to launch and issue regulated stablecoins, whether those are your e-money tokens or whether those are your asset reference tokens. And of course, we also have designed tokenized deposits from the infrastructure perspective. So that's kind of my role within the FIS.
Hi, Caitlin Kulikowski. I'm the Director of Relationship Management for our crypto vertical at WorldPay. So my team oversees our global portfolio of exchanges, OTC desks, marketplaces that do card processing with WorldPay. So we handle the on and off ramp globally across US, UK, EMEA, APAC, and getting into LATAM. So handle the processing, and today we'll get into a bit of the innovation that we're working on too on the stablecoin side with our merchants.
Great. Hi, everyone. I'm Ashish Agarwal, a partner with PayPal Ventures, so great to be here. PayPal Ventures is the CVC arm of PayPal Inc. We have been in operation for now 7 years. This is actually the 8th year for us. We invest in, no surprise, in fintech, crypto, and commerce enablement early stage startups. We've done about 80-odd investments in that time period and deployed in terms of dollars about 800 million. And again, I think for us, when we look at investment, we look at the business model and the pain point and problem statement first versus where the business is located. So we have companies all the way right from Japan, South Korea, and you start to walk towards the West, towards the US. So really global lens. We have one single IC who does that. So this is also the value add we bring in. Hey, what are the developments in the rest of the world that could inform in different markets?
Okay, great. Well, I think to kick things off, it's always good to take like a 50,000-foot view. So if we had to, Julia, if you had to think about from an FIS perspective, how do you guys think through the mapping of stablecoins? We've obviously got privately issued stablecoins, the more nation-state level ones that you guys are intricately involved in. But how do you kind of break that market up?
Sure, and I think as a software provider, as a kind of end-to-end payments provider, we are fairly flexible in terms of our approach. So in terms of like infrastructure, we want to support the kind of the private stablecoin issuers. We want to support those who want to launch the central bank digital currencies, or those commercial banks who also want to be in the game and also launch the regulated stablecoins. So I think from our perspective, we are fairly agnostic, and we want to support institutions, across Europe and of course, globally at some point in the stablecoin, offerings. I think, of course, what we are seeing in the market, especially in Europe, the regulation has emerged, and I think the MiCA framework, the MiCA regulation has been kind of a first step towards the regulatory framework globally. Since I think we have seen other governments and other jurisdictions, other central banks are kind of taking the approach and also starting to look at how they could regulate stablecoins as well. We've spoken and we've actually working with some commercial banks in the Middle East as the regulation for the stablecoin is going to launch there as well, and the framework is going to enable commercial banks to be the kind of sole issuers of regulated stablecoins. And of course, MiCA is probably the most comprehensive regulation that exists today, and that allows not only commercial banks to be the issuers of stablecoins, but also your e-money institutions and credit institutions. So I think that's a great opportunity to in the market to tackle various use cases in terms of stablecoin issuance. That could be your interbank transfers or your cross-border payments across Europe. So that could really enhance on how the money moves across the kind of Europe between various institutions. So we are there to pretty much support all the players out there.
Okay, nice. I mean, Ashish, from an investor lens, I guess, when you look at the stablecoin market, the fintech market, how do you kind of, segregate that stablecoin market and the way you look to deploy capital in?
So I think, all the audience and in this forum, we spend a lot, if not most, of our time in the payment space, right? We think about all the nerdy, geeky stuff about how money moves, how what are the challenges, how fraud happens. But if you take a step back, why is that payment being made is to facilitate an underlying transaction. It's either me sending money to my family in India, or it could be me buying at a merchant online, could be in the UK, could be internationally. What in those scenarios, what would you want? You want speed, low cost, and no fraud, right? For me, that's what people care about versus, hey, I want my money to be moved over stablecoins. That's more of a how to get to what the final outcome is. And hence, for us, when we think about stablecoins or the new generation of payment rails, that's like a Swiss knife approach. Mr. Merchant, as a company, as a payment processor, we can offer you all the traditional rails for the use cases where they work, and for the corridors, for the use cases where it doesn't work. For example, number of emerging markets where there's this challenges around dollar shortages. Hey, we can help mitigate that using stablecoin. But in the end, you're gonna get your money faster at lower cost with no fraud.
Yeah.
That's what merchants care.
No, for sure. And I think the the use cases that you're talking about there, like the end result, have really been enabled, by companies like WorldPay. And WorldPay have really been, I guess, first movers, so to speak, in from a PSP perspective at least. What really made WorldPay take stablecoins seriously and start moving into the space? Can you maybe just walk us through that journey that you guys took?
Yeah, sure. So WorldPay's been involved in the crypto space in some capacity for the last 10 years. When Coinbase launched debit cards, we were the processor that did that with them. And so I think if you fast forward to the last 4 or 5 years, we've really doubled down in the space, built up our portfolio, and are facilitating global expansion of merchants on the card processing side, but then looking to see how we can innovate and continue to offer these merchants something within the crypto space. And I think stablecoin settlement was just a natural progression into that for a lot of the same reasons you just outlined. Yeah. Being able to take traditional fiat off of some of the banking rails and give them a portion of their settlement in USDC is something that we launched in 2022 in partnership with Circle and Fireblocks. We're seeing great return on that in terms of merchants who want it because they don't have bank account access, they want it quicker, they want cheaper cross-border fees. And then now what we're looking to do, we've just completed a pilot with Visa to remove the leg of settlement with banking rails one step further, where Visa actually sends the USDC to WorldPay's wallet, and then we can just pass on the stablecoin to the merchant without having a minting process in between that.
Yeah. No, it's really interesting to see. I mean, stablecoins are really getting embedded into the fabric of payments infrastructure, you know. But, you know, I think, you know, double-clicking on those use cases, you know, you started off with the B2B stablecoin settlements use case, but I think that's starting to move, you know, you're starting to move into the B2C side as well. You know, with the kind of B2C stablecoin use cases, we've actually enabled, you know, several of these use cases. Was one, you know, more recently was one of the biggest HR platforms in the world, so B2C stablecoin payouts. You know, how are you guys thinking through that? Has that been driven by merchant demand as well? You know.
Yeah, absolutely. And I think the unique thing, or the interesting thing about this, is it opens the door to non-crypto natives. So it's able to get other merchants that might be timid or hesitant to crypto involved in some capacity. And so what it does is WorldPay has a payouts platform that we offer today across all of our existing merchants. But what we're working on, instead of sending the fiat, it's exactly that, sending USDC. So merchants like an Etsy or an Airbnb, they have sellers and hosts globally. Yeah. Argentina, for instance, they might not want to get peso due to the value of the dollar, or did my mic just go out?
Yeah, I think it's better.
Okay. So due to the peso volatility, or just by not being able to have access to a bank account. And so what we're doing is being able to offer them the ability to provide to their sellers and their hosts the USDC stablecoin, which again opens up the space to non-crypto natives, sends it quicker, sends it cheaper, and gives access to users where banking rails might not be an option.
Yeah. I think one more point, Chris. Again, I don't have any data to quantify, but just think about use cases or flows where the probability of refunds or chargebacks is low. Like you need remittances. Money is only one direction. In a typical e-commerce spend transaction, there is always a possibility use case where the consumer paid, say, using stablecoin, but there is an element of refund. So how does that refund happen now? Goes back to the consumer in what shape and form. So I don't have any supporting data how this is working out, but wherever you would see a unidirectional flow of money, whether it's financial services, I need to pay one way to my utility carriers or remittances, I would think that's probably a fertile ground for early adoption. Whereas, well, I think if you are in a multi-payment rail PSP, refunds is natural to you because you've already been doing that for the fiat world. But that's just one variable to think about.
No, for sure. I mean, I think we've also seen, you know, within our business, PSPs, fintechs approaching stablecoins. They start with the B2B use case, similar to how WorldPay did. You know, then merchants drive that demand, and then they start lifting up their head and say, look, we're getting comfortable with this infrastructure. How do we enable, you know, consumer-level use cases, whether that's one-way remittance into emerging markets, whether it's B2C payouts for, you know, gig economy platforms. So it's definitely a developing use case on the B2C side, and lots of volume going to be there.
I think, you know, also the emergence of the regulated stablecoins, MiCA stablecoins, let's call them for simplicity. I think, you know, that will also enable, you know, a host of use cases. Of course, you know, initially, you know, that's looking kind of, you know, more from the institutional perspective and having those institutional use cases. But I think, you know, towards, you know, end of, you know, this year, we'll probably see a lot of, you know, B2C use cases, C2C use cases, and maybe there will be an element of DeFi in the regulated space as well. So I think, you know, the regulated stablecoins, MiCA stablecoins, will definitely, you know, demonstrate new use cases on, you know, for the kind of an adoption as well in Europe.
Yeah, and I mean, on that, you know, we've been talking about, like, you know, merchant level, consumer level use cases, but moving up that stack into the infrastructure where you guys really play. What are some of the interesting pilot projects, you know, and that sort of thing that you're working on with, you know, CBDCs? You've got a really good perspective being, you know, chatting to the commercial and the central banks.
Sure. We actually launched, our, testnet. Of course, it's a, closed environment, and that is actually, testing the MiCA stablecoins. So that's maybe just, a quick, note on that. So we are testing the stablecoin issuance, MiCA stablecoins, with, a couple of credit institutions and e-money institutions in Europe. And then, of course, on CBDC side, we have done actually several projects, proof of concepts and pilots. Unfortunately, I cannot, speak about, some of the larger projects, but we are, fairly engaged in offline payments and providing the offline functionality for, CBDC, but also that, particular solution is pretty independent of our, CBDC solution. So hence, it could be, used for any of the existing payment systems as well. So that's, something we are working on at the moment with, several central banks and exploring on how to move the offline CBDC into production. And then, of course, we have done some of the, pilots and proof of concepts on the performance and finality for central bank digital currencies. Again, that's very important in terms of, what is the performance of your, ledger. And I think, there's a lot of bottlenecks today with some of the maybe public, blockchains where the performance is not as great. Of course, we see payment volumes only increasing, and I think we are estimating that those volumes will continuously increase over the next couple of years, and you need probably a ledger that is going to support high volumes, transaction volumes, right? So with our platform, we have done some testing, and we have demonstrated that we can deliver 1 million transactions per second with instant finality. And I think with a lot of platforms that we have looked at, the finality was probably the the major bottleneck, because if you're looking at the token-based approach, you have a queue of tokens queuing, and they do not settle instantly. So we were able to achieve the instant and atomic finality and 1 million transactions per second. And then, of course, we have done some of the work with a few central banks last year. We've done a project with Bank for International Settlements, looking at this new model and introducing this new entity within this ecosystem, existing ecosystem, some entity that was called exposureless intermediary or access enabler. And what access enabler was essentially performing within the ecosystem is routing transactions and routing the payments without having the ability to touch funds at any point of time. And also, the benefits of that, proof of concept was that, it removes some of the barriers that exist in the payment, banking space today, but also it improves the liquidity. So as an access enabler, you don't actually need to hold the liquidity. So you don't need to be regulated like a commercial bank, or you don't need to have all the licenses that WorldPay colleagues would need to do when doing the processing, right? So there are lots of benefits of having this exposureless model where entities are just acting as a facilitators of the transaction rather than holding the liquidity or touching funds at any point of time. And of course, there are a host of other CBDCs, but I think we are short on time. Yeah. Sorry.
No, I know it's interesting. So a lot of interesting things happening at that institutional level, of the stack as well. Caitlin, maybe you obviously also have a unique position covering all the crypto clients at WorldPay, and you've been doing that for a while. What are those crypto native customers? Obviously, they're using stablecoins in the business. You're doing acquiring for them. What are those crypto native customers asking for? What new use cases are you exploring with them specifically?
Yeah. So with just the initial launch of USDC as settlement, they're asking for more enhancements to that. So the schemes don't settle on the weekend. What we're working on is, obviously crypto is 24/7, 365. Yeah. So looking to launch 7-day settlement. And then on top of that as well, looking to do same-day settlement. So that way it's pre-funding essentially. Yeah. So it's really just the speed of the pace that we can get them their funds. And outside of that, we're looking into, or we were looking into stuff like pay by crypto. And so the crypto merchants aren't necessarily looking for that because you're not going to go on a platform and pay with stablecoin to buy Bitcoin. But they can power that, which is what's exciting to them. And then again, it gets back to the use case of just larger adoption to non-crypto natives with pay by crypto, but also USDC settlement to non-crypto natives as well, which I think once you're able to see that it works seamlessly, it just is better for the space and the industry to grow. So again, it's the speed at which we can do it, but also then the education of rolling out USDC and potentially pay by crypto to non-crypto natives.
Yeah, all right, very interesting. I mean, maybe switching gears a little bit to the regulation pieces. We obviously have MiCA coming in, as Julia was alluding to. You guys are going to work with some MiCA, MiCA regulated stablecoin, providing these guys, the issuers, the infrastructure to do that. Ashish, you mentioned, if we think about that remittance use case we were chatting about earlier, that one-way remittance into emerging markets, those, effectively you're giving those emerging market participants access to dollars that they wouldn't have had, but that presents a bit of an issue to the local, the local central banks or those local governments. I know you had some views about, what that could look like, or how those governments are really thinking through that, or should be thinking through that.
Yeah, I think that's a real problem, and honestly, I think my personal view is that's not a fintech problem, because these challenges are structural challenges with the respective economies, and there's a reason why the currencies are having a hard time. And I think, and if you think about the authorities in power in these economies, there is an element of perception with some element of reality that with stable coins, I lose control over my currency. I lose control over the money movement in and out for my citizens. So it could be wealth leaving my borders of my country. I think that's where I think that's for any investor to underwrite. That's a known unknown. You know the risk, but you just don't know if and when it could play out. The mitigant around, if at any, is to build a transparent and open relationship with the regulators, informing them how you're thinking about the world, versus nobody wants to look nobody wants to be looked as dumb and bad. No, like nobody wants to be caught off guard, surprised. So whereas taking them along the journey, this is what we're going to do. Maybe some mistakes will happen. It's probably a good starting point, versus don't care who you are, and we're going to do our way, which can get you off the ground. But if you want to be a scalable business and here for the long term, puts a number of question marks. And this is not just one country question. This is for most of the emerging markets where these challenges are.
And I think also in some of the markets, in some of the smaller economies, probably issuing a stablecoin instead of the and backed by the reserves instead of like central bank digital currencies may actually make sense, because of course launching a kind of a full end-to-end CBDC infrastructure is very costly for the smaller economies. So I think in some instances regulated stablecoins or stablecoin issuance by the central bank could be a response to reduce some of the costs and burdens that could be on that particular central bank.
Yeah, no, I mean exactly that. So if you think about, despite like those risks that those emerging markets are facing, and some of the governments, and I think it's like 120 CBDC projects being looked at, those markets, by issuing, they're taking a bit of a pragmatic approach to this, and some of them are running pilots and are wanting to issue. And if you bring local currencies on chain by a nation state issuing their own CBDC, you start getting to really interesting things on the remittance side. You can start in stablecoin, you can end in stablecoin, and then it can really permeate into like traditional FX completely. Maybe even replace it. All of FX running on a blockchain, which would be Pretty cool. Blue sky, but interesting.
But I think, as you said, there will be no, country or jurisdiction that, where kind of, they will take exactly the same approach just because, Bank of England or any other central bank decides, to launch their CBDC. I think, central banks would, have their own kind of, objectives on, why do they need to, launch this new particular digital regulated form of money, whether that's CBDC or whether that's going to be a stablecoin. Maybe some central banks will decide against both. Maybe it will be just allowing commercial banks to tokenize their deposits, and that's going to be as good as CBDC or stablecoin. So I think we will see variations in globally.
No, for sure. Look, I think we've covered quite a lot, but there's always this interesting, covered the regulation, the use cases, how we map the market. But if you take a step back and the fintechs looking to get involved still face some challenges. From your guys' differentiated seats, what advice would you give fintechs or PSPs who are looking to get involved in the space? Are there any challenges that they should be aware of? Anything that they should look out for? Ashish, maybe you kick us off.
Well, I think a generic answer from a VC would be walk back from what your customers are asking from you. So it's jumping right in can be fairly overwhelming if you don't know what the goal you want to solve for. So either it could be, hey, I want to solve for this particular use case, start there, and then branching on versus taking on at all every time. And I think just a sequencing would be my suggestion.
Yeah. Caitlin?
Yeah, I think licensing and banks are probably the biggest hurdle. So with licensing, you need to understand what one you have, what one you need in order to process in these countries. And also with banks, to get money on the blockchain, we still need a banking relationship. And right now, some banks are still a bit risk adverse in terms of jumping in. So just having a clear view of what you want to do in those respects, and also leaning on partners like BVNK to take some of the regulatory lift off of your shoulders, because there is still a lot of challenges and blockers to get in, and working with a partner that can help kind of pave that way for you and make that plan, I think it will set you up for success.
Awesome. Judah?
I think I have a couple of points for those who are starting. And for the fintechs, I think be fearless. I think that's the most important. And I think do have your use cases out there. You have to have a very good understanding what you're trying to solve, for whom you're trying to solve, and what is the commercial model for what you're trying to solve. And of course, you have to believe in what you're doing. If you are there driving the financial inclusion, that should be your goal, right? If you want to reduce the cost, of banking for those who are unbanked today, that should be your focus. So I think those are kind of my tips for fintechs. But also I think be fearless and kind of dig into regulation and compliance. And I think there is an exciting panel after this on compliance, the most exciting part. And just be fearless.
No, exactly. I like that answer. I think from a BVNK perspective, we've got we serve very many PSPs, fintechs, and to Caitlin's point, working with the right partner who's got the banking and the fiat, as well as the crypto infrastructure, as well as the regulatory coverage, can really help you get to market quite quickly. And we're also there to solutionize with fintechs around what use cases to enable first, what makes commercial sense. So finding the right partner is definitely one to think about. Look, I think at the end of the day, we like to think of stablecoins. We've heard it before with Bernie, and stablecoins is the next evolution of payments infrastructure. We're really pushing to enable that and bringing the banks and blockchains together. Do you guys agree with that, or what sort of emerging payments technologies outside of stablecoins are you also paying attention to?
Of course, happy to answer that. So of course, as you said, blockchain is relatively important. I don't think we have seen a mass adoption of blockchain. I think that's yet to happen. We're seeing commercial banks and banks, fintechs, doing tests and POCs, pilots. But I think we are still yet to see that blockchain adoption across payments and financial services industry. I think artificial intelligence, that's another area of kind of a key focus areas for us. I think that's also something we are investing in, and also looking at how some of the AI machine learning tools can enhance some of the existing products that we are developing within FIS. And then of course there is another kind of and maybe that's more from the kind of product perspective, but fraud and sanctions screening, AML, CFT, that and the tools that are available there, like machine learning and artificial intelligence. That also is something that is of critical importance to FIS, because I think we're seeing a lot more fraud use cases, and I think the fraud use cases are becoming more novel and kind of they have new ways of committing the fraud. So I think that's also becoming a key priority for us at FIS. And of course there are lots of other tech that we are not directly involved maybe, but just observing as kind of a fintech.
Caitlin?
Yeah, I think from a WorldPay stance, I'm looking at it a bit different in terms of growing these use cases and building these use cases. A lot of them will start with the consumer, and I think what's unique about what we've done with USDC settlement is the consumer is the front end initiating, but they have no visibility to the fact that they're facilitating in sending crypto to the ending merchant. And I think that's pretty powerful in the sense of getting into the space. There's still a lot of unknown, there's still a lot of education, and if someone can take a part in working within the Web3 space and facilitating these transactions without even being aware, it then opens up their eyes of like, oh, it's not as scary or daunting as I thought. I was at a panel the other month, and at Visa, someone from Visa was explaining kind of a similar scenario where there's I think somewhere in Asia, there's an app, and I'm sorry, the details are escaping me, but it's just that it's like an app for music, but it's powered by the blockchain, and the consumer on the app is not aware that they're working or they're facilitating to information on and off the blockchain. And when it gets to that where it's just seamless and a natural progression into these use cases, I think that's what'll power it forward into the future.
Sure. Ashish, where are you deploying capital these days?
Well, I think we still need to see a breakout use case. Folks who know it, but it's not a mass adoption stage yet. So I think that's where, I don't know, so if you ask me what the use case is, no clue. But how do we bring folks not in those emerging markets onto stablecoins? And what's the pitch, right? Hey, I mean, TransferWise publicly discloses their numbers, the costs that they charge, 60 basis points on an average to get money from one currency to another. Some of the most competitive corridors is down to 10% of that number. So all done on fiat. Yeah. And so for a consumer to appreciate, like, hey, this is a remarkable cost savings, is that the pitch? Or is, hey, it's instantly, is that the pitch? For a consumer to just jump into, I think we just need to see that hook.
Okay. Well, let's I think it's been a great conversation. We've covered a lot of ground, but let's see if the audience have anything to ask us. It doesn't look like you guys are very active, so it would be great if you add a few more questions to Slido, but we've got one that came through. It's a bit of a tricky one, but anyway, I'll open it up to the panel and see what you guys think. So, in light of some of these cross-border use cases we've been talking about, how would you manage, how do you manage these cross-border restrictions imposed by sovereign governments? So, amount of money you can move in and out of these markets, generally out. Yeah. Do you see that as a barrier to the adoption of cross-border payments powered by stablecoins?
Well, if I may start, I think, and we have seen a number of pitches, founders building, because this is a real pain point. And when you have a real pain point, people will tackle it in different shapes and form. And founders are building this in LATAM, founders are building this in Africa, founders are building this in Southeast Asia, and it's a universal, if I may, pain point. And I think until you sort of reach a certain critical mass, you are small enough to fly under the radar, and you can continue doing so. at some point where you become too big or on the direction to become big, that's where that regulatory muscle, the regulatory setup or relationships do matter a lot. And I think in some situations, it could still be very well a blanket no.
Yeah.
So we just need to be open to that.
Yeah, no, for sure. We've got another one that just came through.
Maybe just, quickly from FIS, from my perspective, I think, the regulatory framework is still evolving. And I think, we've just, seen the, European framework, MiCA framework. And I think, as, the kind of, regulated stablecoin framework evolves, globally, we will definitely see some sort of, consensus on kind of, cross-border payments.
Yeah.
And I think, at some point, hopefully shortly, that's going to be seamless and frictionless for all of us.
No, for sure. Caitlin, here's one for you. What have been the keys to the growth of crypto at WorldPay? Any specific things that that have kind of driven that? Is it customer vertical, certain type of vertical, or certain use case?
Yeah, good question. I think from a WorldPay stance, again, we've been in the crypto space for about 10 years, but we've got a vast knowledge of payments expertise across numerous verticals. So when we're working with a prospect or when they come on board, it's our job to, a lot of them are taking cards for the first time. So aside from USDC, it's just how do we get into these markets with cards? They look to us as not just a vendor, but a partner who's going to help take them into these markets. So I think it's our knowledge. I think it's working with partners like Fireblocks, like Circle, like Visa, MasterCard, to really show innovation beyond cards once we get them in the door, to show stability of, yes, we're here to help take you globally, but also now we're here to find what we've been talking about this afternoon, use cases beyond just card processing. So working with them on the USDC payouts, working with them on USD settlement, that'll help facilitate the blockers that they're seeing with banks and regulations as well.
Yeah, okay, cool. We've got another one here, which is actually quite interesting because, stable coins, there's one here. Any comments on Bitcoin and the Lightning Network? So obviously we've been speaking a lot about stable coins. We have yet to have mass adoption of stable coins on Bitcoin, and they're starting to work on that sort of thing. But Lightning has come in as a almost instant real-time payments network as well, to rival, I guess, what's happening in the stablecoin side. What do you guys think about, Bitcoin and the prospects for the Lightning Network to do payments at scale?
Well, I would say,
yeah.
I don't have any informed opinion to say anything valuable or new this audience would know. So I think this still continues to be an evolving field. Yeah.
Anyone else?
I have a personal opinion, but Caitlin, maybe you're the better.
I don't have an opinion to speak on that too, so I'm happy to hear your personal opinion.
I think I'll pass on my personal opinion.
Yeah. Okay. Look, I think we've got time for one more. Let's have a look here. Julia, here's one for you on CBDCs. What's the thoughts of CBDCs versus tracking consumer behavior and being able to prevent specific consumers from spending, on various products? So is that oversight theme that's come in with CBDCs? How do you think about that? How do you guys dispel that?
Good question. Thank you for that question, whoever asked that for that question. I think, our consumer behavior is tracked today as well. Yeah. So, my credit card provider, they track my consumer behavior all the time. They sharing with me all the things I like. And those are bad things and those are good things. So I think, from kind of, privacy perspective, CBDC can be as private as you want it to be, as government wants it to be, right? So I think there is definitely an option for central banks to decide to design the retail CBDC as private as they want, or they can make it as transparent as they want as well. But also, do consider that there are fraud and risk checks today that also would validate some of the information, consumer information, and some of the card providers, they would also use some of the data to analyze and track the consumer behavior as well, right? So I think privacy by default today does not really exist, and I think if CBDC is designed, it can actually be more private than some of the existing, payment systems. But again, it's the central banks and government's decision to design a system that that fits the best the objective, and also from like restricting consumers to spend on certain goods. I think there was a law, a regulation that got passed recently that if you're born after specific, I can't actually remember exactly, but if you're born after specific year, you would never be able to smoke. There's like a smoking ban. I don't remember what exactly that regulation was, but essentially government is banning smoking. Right? There is a smoking policy here in the UK that is kind of restrictive, right? And that's not allowing consumers to buy things they would like to buy, right?
Okay.
So that's probably my answer here.
Yeah. Well, good. Look, I think we're out of time. We've covered a lot of ground. Thank you so much for joining us today. And, I hope the audience found it, informative and entertaining.